Hello everyone, good evening. Warm welcome to Supercoaching Regulatory Bodies by Testbook. And today, in this particular session, we are going to discuss a very important topic, and that is function of RBI. And the function of RBI which we are going to discuss today is RBI responsible for printing and issuing of currency. I'm not sure that whether you have gone through with the thumbnail correctly, because in the thumbnail itself, I have mentioned this point very clearly that what all questions I'm going to answer in this particular session. So first of all, my first question would be that, sir, we all know that RBI is responsible for printing of currency, but do RBI possess the power to print unlimited currency? If yes, then what are the reasons that RBI is not doing it? And if no, then why RBI cannot print the unlimited currency? So first point from where we are going to start today is that RBI is issuing, or RBI is the authority responsible for issuing and printing of currency. But my question is it possible that RBI can print unlimited currency? And if it is possible, why RBI is not doing it? And if it is not possible, that means RBI is printing limited currency. Fine. Then the second question is, sir, if RBI is printing the limited currency, on what basis this limit is decided? Sir, either this limit is decided on the basis of GDP or inflation, or do we have many more factors which are responsible to help RBI, or the factors which are considered by RBI in order to do the same? Secondly, which all RBI departments are involved in the entire function of RBI, where RBI is not only issuing the currency, RBI is also circulating the currency in the economy. And in the end, I'll discuss a very important term that is known as demonetization. So this session is going to be a really very important session for you if you are preparing for any examination, not only RBI, but any other examination, maybe bank exam, SSC, or whatever examination you are going to appear in, because this kind of information is really very important. And in most of the exams, there could be a question related to these informations. And most importantly, there are chances that the question related to this particular topic can be asked in your interview. So we know that RBI Grade B phase 2 has been conducted, and the moment phase 2 has been conducted, then in that particular case, once you clear the phase 2 examination, you will be writing down, or you will be appearing for the interview part, and in the interview, majority questions are going to be related to RBI's function. So that is the reason this is going to be a very important session for you all. So let's quickly start the discussion. What I'm doing is I'm just sharing the link of this session with your friends, so that more and more students, they are aware that yes, this session is live, and once they are aware, they should join this session, which is going to help them a lot in order to clear their important concept related to RBI's function. So let's get started, guys. The first question is that, sir, RBI is the authority which is responsible for the printing of currency. That is true. We know that. But the second question is, sir, RBI print this currency in limited value or unlimited value? If unlimited, or if not unlimited, what are the reasons? So let's find it out. So first point from where I'm going to start my discussion today is, first point, that sir, RBI is responsible to print the currency as well as issue the currency. The question is, this power is given to RBI according to section 22 of RBI Act 1934. Section 22 of RBI Act 1934, where this power has been given to RBI, that RBI will be responsible for issuing the currency. Now the question over here is that, sir, RBI will issue the currency in limited value or unlimited value. Let's try to find out the answer to this question. Before I discuss limited or unlimited wala part, I would try to discuss this in a new manner. What manner, or in which manner I'm going to discuss today is, see, whenever we talk about finance, whenever we talk about RBI, whenever we talk about banks, the first thing which strikes your mind is currency, which strikes your mind is money. But have you ever given a thought, what is a difference between money and currency, what actually money is, how money is divided in terms of currency, and this currency term, is it specific to a nation or is it specific to a government or it is specific to the administration. So let's discuss that part, then I'll jump and I'll discuss the question which I have raised for you. So the first question which I have for you all is how you define a word money. If someone asks you what is money, then what will be your answer? If someone asks me now, what is money, I would say money is nothing but it is a medium of exchange. It is nothing but it is a medium of exchange. When the term money was not there in the economy, we followed barter system. Barter system basically means inter-exchange of goods and services. But over the period of time, as the number of goods and services provided in the economy has increased, then there was a need of a common medium which can be used as, I would say, a common medium to complete these transactions. Earlier, the condition was you can exchange wheat for rice, you can exchange rice for sugar, you can exchange sugar for, let's say, pulses. But over the period of time, when the diversity in terms of goods which have been produced has increased, there was a requirement of a common medium. Otherwise, it was very tough to trade in terms of or to complete the trade in terms of the barter system, because there was the requirement of double coincidence. Double coincidence means I want to sell rice against wheat. I should find someone who is ready to buy wheat against rice. So finally, money was introduced, and the moment money was introduced, we are now converted from barter system to monetary system. The first form of money which came into existence was commodity money. So what is commodity money? So commodity money basically means when one of the commodity is used as a common medium of exchange. For example, gold, which is a commodity itself, or it could be silver. When these gold and silver coins, they were introduced and they were given the title that these are going to be the common medium of currency, I would say common medium of exchange. So the term is commodity money. But the best part over here is, in case of commodity money, actual value was greater than or equals to its face value. What I'm trying to say, let's suppose there is a silver coin, and if you are purchasing the goods against the silver coin itself has that value in it, because silver is something which can be used, which can be utilized. So over the period of time, when commodity money demand increased, there was a condition that nations, they were not having the adequate amount of gold or silver which can be used as a commodity money, or which can be used as a common medium of exchange. So this form of money was revised and a new term was introduced which was termed as fiat money. Fiat money basically means, sir, a type of money in which the actual value is less than, or I would say pretty less than, face value. What I'm trying to say, guys, you must have seen 100 rupee note, 200 rupee note, 500 rupee note, for that matter 20 rupees note, 50 rupees note. On all the notes there is a statement written, we promise to pay the sum to the bearer. Or there is a term written, हम धारक को 100 रुपए देने का वादा करते हैं, we promise to pay 100 rupees to the bearer, and the signature is done by the RBI governor. Now the question is, why that promise is done? That is the reason. Sir, actual value of 100 rupee note is just 2 rupees and 36 paisa, but you are using it for 100 rupees. That means it is a form of money which possesses low actual value in comparison to its face value, and that is the reason promise is done, and we call it as promissory money, on which the promise is done by the authority on which we trust, and these are taken into circulation. These are introduced as a format of circulation. This was a case. Now, from this commodity money, fiat money, there is a term which is disturbing you, and that term is, sir, actually what is currency? Obviously, if you ask me currency is basically a form of fiat money. What is currency? Sir, it is a form of fiat money, or even you can say it's a type of fiat money. But Sir, is it correct to say that currency changes with change in nation? That is incorrect. You should not say that for different countries we have different currencies. The reason is, for that matter, if I say, for that matter, if I say, uh, huh, you know this very well that European Union, out of European Union, there is a zone which is known as Eurozone, which include, for example, we have Italy, France, Germany, they all use a common currency, that is euro. So we have different countries, but the currency is same, that is euro. So which means, sir, currency is a form or type of fiat money, which is basically what? So it is basically a unit. It is basically a unit to measure. It is basically a unit to measure money. It is basically a unit to measure money. And secondly, the second point, which is really very important, that is, sir, it changes with change in promising authority. It changes with change in promising authority, which means if the promising authority is RBI, we call it as rupees. If the promising authority is US dollars, we call it as, sorry, if the promising authority is Federal Reserves, we call it as US dollars. If the promising authority is, let's say, Bank of England, we call it as what? So we will call it as pound. So as the promising authority changes, the type of fiat money changes, and those different types of fiat money is known as currency, which is basically a unit to measure money. Which is basically a unit to measure money. Now, the question is, sir, for every economy, currency is printed, and this printing is done by its central bank. Printing is done by central bank. But the question over here is, sir, if printing is done by central bank, which is clear, then in India, name the central bank of the country. Sir, India's central bank is RBI. And my next question is, if RBI is the central bank, then on what basis RBI decides what value of currency is going to be printed? So let's move ahead and let's start discussing this question which I raised in the starting itself, that is it possible that RBI can print limited currency, or sorry, unlimited currency? Let's try to find out the question. Let's try to find out the answer of this particular question. Before I give you the answer to this question, let's start the discussion. I'm just sharing a story with you. The story starts with an individual, and the name of the individual is, let's say, Rahul. Okay, so Rahul was standing on the road and Rahul witnessed a car passing by. The moment that car passed by, he thought in his mind, I wish I owe the car. I wish I owe the car. Hey Bhagwan, kash mere paas bhi gaadi hoti. This was what his term was. That means he has a desire. That means he has what? He has a desire. The moment car passed by, then he took out the phone from his pocket. He searched the model of the car on Google and tried to check the price of that particular car. The moment he checked the price of that particular car, he found that the car is available. He found that the car is available for 10 lakh rupees. The moment he checked that car is available for 10 lakh rupees, then he checked his saving account balance, and the moment he checked his saving account balance, that possessed value or deposits more than 10 lakh. More than 10 lakh. That means he has a desire to buy a car. Secondly, he is capable. He is capable. That means he has financial capability. He has financial capability to purchase the car. Thirdly, he was talking to himself that, Rahul, should you spend your savings to buy a car, or you should keep it for some other purpose which can be utilized in the near future? So he's in a dilemma. Let's say he's ready. Let's say he's ready. The moment he is willing to make expenditure, or to buy a particular product, that will result in what? So this will result in generation of demand. This will result in what? That will result in generation of demand, or this is basically termed as demand. So what I'm trying to say, I'm trying to discuss a very important term with you, and the term is demand. If someone asks you, what do you understand by the word demand? What will be your answer? So demand is a combination of three conditions. First, you must have a desire for a commodity. Secondly, you must be financially capable to purchase the commodity. And third, you are willing to make the expenditure in order to purchase that commodity. If all these three conditions are completed, that will result in generation of demand. Is it clear? समझ आया? एक बार comment section में yes sir लिखना. Is it clear everyone? ठीक. Now, the next point is, sir, these are the three factors on which demand depends. I can say in this manner also. But can I say out of all these three factors, the most important factor is financial capability? Can I say that out of all these three factors, the most important factor is financial capability? What I'm trying to say, let's suppose the same individual Rahul, he was thinking and now he's planning to buy a car. What happened before he purchased a car? The very next day, Rahul wins a lottery. And the moment Rahul wins a lottery of, let's say, 2 CR, 2 crore rupees, the situation changed. How the situation changed? So now he has funds. Now he has the funds. He is capable. The moment funds in his pocket increased, his desires will increase. Now he's not settling down with the same car. Now he's planning to buy BMW or Audi. Secondly, the moment money supply in his pocket increases, his willingness to make the expenditure will increase. It's quite obvious. अगर जेब में पैसा ज्यादा होगा तो खर्च करने का मन भी तो ज्यादा करेगा ना. तो अगर आपकी जेब में पैसा ज्यादा तो आपकी चाहत, आपकी डिजायर ज्यादा, और अगर आपकी जेब में पैसा ज्यादा तो कहीं ना कहीं आपका जो खर्च करने का कैपेसिटी है, कैपेबिलिटी है, वो भी क्या होगी, बढ़ जाएगी. तो कैन आई से दैट if I talk about demand, can I say in this manner, please pay attention on the screen, that money supply is one of the most important factor. It is not the only factor which decides demand, but yes, it is one of the most important factor, that is money supply. The moment money supply increases, please pay attention, this is very important and you're going to enjoy this. The moment money supply in your pocket increases, it will result in increase in demand. Say yes or no. Money supply increased, desire increased, willingness to make the expenditure increase, and obviously all the three conditions have been fulfilled. The commodity which you were not even thinking to purchase, because of the lottery you have got, now you are in a position to spend more, now you are in a position to purchase. Now you're looking for a car which should have air purifier. You will buy an air purifier for your house also. So in this manner, your desire increase, your willingness to make the expenditure increase, and collectively, I can say the major factor which affects your demand is money supply. And the moment money supply in your pocket increases, it results in increase in demand. Say yes or no. Say yes or no. It results in increase in demand. Say yes or no. Okay. The moment demand increases, see, whenever demand for a commodity increases in a market, obviously the production or the producers, they will try to increase the production. भाई ऑब्वियस ही बात है ना, अगर मेरा प्रोडक्ट बिक ज्यादा रहा है, मेरे प्रोडक्ट की डिमांड ज्यादा है, तो मैं क्या करूंगा सर, मैं उसकी प्रोडक्शन बढ़ा दूंगा. What I'll do, I'll increase the production. So the moment demand increases, it will push the producer to increase production. And if production increases, in order to increase production, you need more labor. More labor means employment opportunities will increase. More labor means employment opportunity will increase. The moment employment opportunity increases, or I would say employment increases, employment in the country increases, it results in what? Sir, it will result in increase in overall income of the country. It will result in increase in overall income of the country. If employment increases, that means we have got solution on the problem, that is unemployment. If employment increases, we have got the solution of a very important problem, that is poverty, and overall income of the country is increasing. Say yes or no. Say yes or no. Guys, yes or no? Do reply in the comment section. This is very important. Is this explanation clear? The connection which I have made it for you is clear? Do reply, please. Suraj, is it clear? Shall I move ahead? Okay. Now, the next point is, sir, if this is a scenario, if this is the scenario, this means that if I increase money supply, if I increase money supply in the market, it will result in increase in demand. Increase in demand will result in increase in production. Increase in production means increase in employment. It results in increase in income. So if government wants to overcome problem of unemployment, poverty, underdevelopment, all the problems can be resolved just by increasing the money supply, and this can be easily done. How this can be done? So money supply means currency. And who is responsible for printing the currency? So that is RBI. Now let's suppose India's Prime Minister make a call to RBI governor and ask him, please print unlimited currency. That means keep on printing the currency until I call you again. Then RBI governor asked him a question. The question is, sir, why you are asking me to print unlimited currency? PM replied, I want to start a new scheme, that is Pradhan Mantri Suitcase Yojana. That is Pradhan Mantri Suitcase Yojana, which means I will be distributing a suitcase containing 10 lakh rupees. Prime Minister said, I will be distributing a suitcase containing 10 lakh rupees to every below poverty line family. Not to everyone, just to only below poverty line families in the country. Just to only the below poverty line families in the country. RBI governor asked PM a question, so what will be the benefit? PM replied, bhai, you are economist and you are asking me what is the benefit? I give you the benefit. If I increase the money supply in the hands of the below poverty line public, their demand will increase. Now they want car, they want bike, they want AC, they want refrigerator. So production is need to be increased. In order to increase the production, employment opportunities will increase. All the engineers who are waiting for the job, they will get bumper jobs because of increase in demand in the market. And those who were unemployed, now they are working, they are employed, they are corporate, they are in the corporate world. Obviously, their income increase, which results in increase in income of the country. So over the period of time, poverty, unemployment, all these problems can be resolved, and India will be a developed nation in a span of few years. Say yes or no. Say yes or no. What do you suggest? What do you suggest? Yes or no? Am I correct? As per you, am I correct? Huh? Now you all must be thinking that, sir, you're not 100% correct, because if you would have been correct, then this would have been already done by RBI. RBI आपके सजेशन की वेट तो नहीं करता. RBI के पास तो बहुत बड़े इकोनॉमिस्ट हैं. आप तो हो ही कौन? बिल्कुल सर, मैं तो कोई भी नहीं हूँ. आई एम नथिंग इन फ्रंट ऑफ द इकोनॉमिस्ट विच आर आउट देयर इन द इकोनॉमी. तो सर फिर जो आपने राम कथा सुनाई है ये गलत है. मान लिया. आई ऑल्सो अग्री दिस इज रॉन्ग. बट माई क्वेश्चन इज, वेयर इज द फॉल्ट? My question is, where am I wrong? That is my question. Anyone can identify it. If not, then I'll help you. The point is, so whatever story you have given, it is not appropriate. Why it is not appropriate? What is the reason? So the reason is you said money supply increases, it results in increase in demand. Okay. Demand results in increase in production. Okay, justified. But what you're trying to say, if you are increasing the money supply without any control, or uncontrolled increase in money supply will result in uncontrolled increase in production, so that is not possible. Why that is not possible? Because of production not only depends on demand. Demand is an important factor, because if there is demand, then only supply will be done. I'm talking about the market law. It is demand creates its own supply, or supply creates its own demand. It works in both the way. So on that particular basis, sir, demand is required so that we can witness supply. But sir, supply do not depend alone on demand, rather it depends on resources. You are saying me to increase the production. You said in India we have huge number of unemployed individuals. Agree. But sir, to manufacture a product, I need resources. But resources, whether they are natural or man-made, all the resources are limited in nature. For that matter, even the human resource is limited. This type of, or I would say the skills for which you are looking forward, or the skills which you are expecting your employee to have, it is hard to find an employee with the same skill set. So if we have limited resources, which means, sir, production will increase up to a mark. But after that, if money supply is still increasing, demand is still increasing, what will happen, sir? It will result in increase in what? Sir, if supply is not increasing at a same rate, and after one particular point, supply cannot increase further, then I would say supply is limited. And if demand is greater than supply, what will happen, sir? It will result in increase in price. And if prices are rising, this results in increase in inflation. So if you are increasing the money supply in the market, it will result in increase in inflation. Uncontrolled money supply will result in uncontrolled inflation. And whenever there is uncontrolled inflation, it results in what? So cash, or I would say, if inflation increases, currency value decreases. Currency value decreases. So which means if you are printing unlimited currency, the value of money will decrease. Today you are able to buy 1 liter of mineral water bottle for 20 rupees. Now you must be requiring 2000 or maybe 20,000, maybe 2 lakh to buy the same bottle. This is the same situation which happened earlier in Germany, then in recent times in Zimbabwe, and then in Venezuela, where unlimited currency has been printed, which resulted in uncontrolled inflation rates, because of which the currency value decreased over the period of time. Currency value decreased over the period of time. That means, sir, RBI will not print unlimited currency, because if RBI is printing unlimited currency, it results in unlimited inflation, uncontrolled inflation, which results in fall in currency value, which will impact the entire economy, or I would say it will result in crash of the entire economy. It will result in crash of the entire economy. But my question is still the same, that is it possible for RBI to print unlimited currency? Please take this statement home. Yes, sir, RBI has a power. Yes, sir, RBI has a power to print unlimited currency. RBI has a power to print unlimited currency, but obviously RBI will not do that, and RBI will obviously print limited currency every year. Limited currency every year. Now, coming to the second question. The second question is, sir, if RBI prints limited currency, then the question is, what are the factors on the basis of which this limit is decided? What I'm trying to say, today it's 1st of April 2025. A new financial year is going to begin, and RBI entire central board of directors, they are sitting in a meeting and they are thinking how much currency we should print for the upcoming financial year. How this limit is decided, or how the value is decided, that what value of currency is need to be printed. Obviously, guys, before I start my discussion, there are n number of factors which are used. There are n number of factors which are used to decide what value of currency is going to be required. But I will be discussing two factors majorly. One is GDP and the other one is inflation, so that you can have an idea that how actual the discussion, or how actual the decision is taken, what value of currency is need to be printed. So let's get started. Now, again, I'll take an example and try to understand this example pretty well. So today it's 1st of April 2025 and RBI wants to decide that what currency is need to be printed for the upcoming financial year. Already 30 lakh crore is in circulation. What else, or what extra should we print in the nation itself? Before this decision is taken, RBI is reviewing one data. The data is GDP growth estimates. The data is GDP growth estimates. So GDP growth estimates for 2025 financial year, 2025-26 has been taken from various organizations' data, and then they reach to a conclusion that on an average we are expecting that India's GDP will increase by 10%. Please make sure I have just taken an example. Don't challenge me, sir तो गलत data बता रहे हैं, 10% तो GDP नहीं बढ़ेगी, मुझे भी पता. I'm just taking an example. So, as per the data, it says that India's GDP is going to grow by 10%. So what it basically means? It means that Indian government or Indian economy possess extra 10% resources in comparison to the previous financial year. I hope you understand this point. I hope you understand this point कि भैया अगर 10% resources ज़्यादा होंगी तभी तो GDP 10% बढ़ पाएगी. अगर resources नहीं होंगी तो GDP बढ़ेगी कैसे? Now this is a situation. Now in this situation, what will RBI do? RBI will begin in this manner. What we actually want? We want that the country's GDP should increase by 10%. We want that country's GDP should increase by 10%. This is what we are requiring, or this is what we want to happen. In this discussion, I am assuming one more point, that India is a closed economy, no import, no export. Whatever we are producing, it is being consumed in India only. Okay. Now, so this is the target for a nation. Now, in order to increase GDP by 10%, sir, the production of the country should increase by what? So production of the country should increase by 10%. Now the question is how we can increase the production. So production can be increased only if producer is wanting to increase the production. But when producer will want to increase the production, so producer will increase the production whenever demand increases. And when demand increases, there are n number of factors, but the basic factor is money supply. Basic factor is money supply. So what RBI will do? Please pay attention. Keeping this target in mind, RBI will print extra 10% currency. The moment RBI prints 10% extra currency, money supply in the market will increase by 10%. The moment money supply in the market increases by 10%, it will result in increase in demand by 10%. The moment demand increases by 10%, not simultaneously, because production takes time. If I assume that production is not increasing at the same rate, or it is not increasing as fast as demand increases, because demand बढ़ाने का क्या है, आपकी पॉकेट में पैसा डाला, आपकी डिमांड अगले दिन बढ़ गई. लेकिन प्रोडक्शन बढ़ाने के लिए बहुत सारे चीजें हैं, बहुत सारे फैक्टर्स हैं. We need machinery, we need labor, so it will take time. So initially money supply increases, demand increases, supply is still the same, which results in increase in price. So price rises, and price rise result in inflation. So inflation is not always bad for an economy, or I would say if you choose either one, inflation or deflation, then I would say controlled inflation is a better option for every economy. So the moment inflation increases, everyone is worried, but we know that this increase in inflation is a temporary factor. The moment demand has increased, producers, they have started increasing their production. The moment they have increased the production over the period of time, the way they increase the production, this will result in increase in employment opportunities in the country. It will result in increase in income of the country, and it will result in to achieve the set targets, that is GDP should increase by 10%. So if I conclude the entire story, the conclusion is RBI print limited currency, but the limit is decided on the basis of various factors, out of which I have taken only two factors for your discussion. The first factor is GDP and the other one is inflation. So on one side, we have an inflation target. Let's say India can handle a inflation of 5% only. Let's take this example. India can handle an inflation of 5% only, but on the other side, India's GDP growth estimates are 10%. So 10 and 5, we will be coming up with a compromise situation where we will be including inflation as well as GDP growth estimates simultaneously. But I have made this example easy where I said India can witness GDP growth estimate of 10%, and India is in a position to handle 10% of inflation as well. So the moment 10% extra currency was printed on 1st April 2025, demand increases. Demand increases will result in first-hand inflation. First-hand inflation will increase, but over the period of time, this demand will increase the production. This production will increase the employment, income, and finally it will result in increase in GDP of the economy. So that is the reason n number of organizations out there in the economy, they measure GDP growth estimates for not only India but for the different countries out there, so that we can estimate the economic scenarios, and on the basis of this economic scenario, one of the important decision is taken, that is printing of currency. Now, sir, as you said that every economy tries to achieve controlled inflation targets, but these controlled inflation targets, they depend on what? So they depend on the size of the economy, as well as they depend on the GDP growth estimates. The nation with high GDP growth estimates has the capacity to handle high inflation rates, because today, due to high money supply, inflation will increase, but don't worry, over the period of time, we are capable to increase the production, and the moment we'll increase the production, the inflation rates will fall down. Are you getting my point? Are you getting my point? For example, US is the largest economy in the world. US GDP growth estimate is 1%, which means US GDP will increase by 1%. Obviously, 1% is a big number because its base is very big. GDP of US is on the first rank in the world. But that means if GDP of US can increase by 1%, then US central bank can increase the money supply by 10% only. In that case, US can handle inflation close to 1% only, because it can cater inflation close to 1% only with the help of increased production. Above that cannot be entertained, above that cannot be handled because of the restrictions that we are a nation with high productivity. We are almost at our peak. There is very little probability to go above this, because of which our GDP growth estimates are low. So a nation not with high GDP, please understand, a nation with low GDP growth rate, generally the developed nations, they have lower capacity, or they have low controlled inflation rate targets. But the nations like India, developing nations which possess high GDP growth estimates, they have the capability to handle high controlled inflation targets. That is the reason in India, target is 4% plus minus 2%, but in US, the targets are pretty below. The reason is same. One side GDP, other side GDP growth estimates. Is it clear? Is it clear, Suraj? But before I conclude, I would say the same statement once again. The statement is Currency is not printed only and only on the basis of GDP or inflation rates. It is printed on different factors, which I will be discussing in some time. But if you consider any one factor, the way I have considered one factor, that is GDP, and the other factor inflation, this is how the calculation is done. And I'm pretty sure if you have listened to me from past 37 minutes, right now you will be in a situation to imagine how actually the currency is printed. Say yes or no in the comment section, then I'll move ahead. Say yes or no in the comment section, then I'll move ahead quickly. Done? Okay. Now let's check out the actual factors which are used or which are taken into consideration to achieve or to set the limit of currency need to be printed. So remember that central bank decide the limit to be printed through combination of strategic analysis and economic indicators. First one is monetary policy goals. That means central bank operate under specific monetary policy framework where central bank has to have to achieve the inflation targets. That means one is monetary policy targets, or you can say inflation targets. For India, it is 4% plus minus 2%. So this could be the first factor. It can be written in both the ways. So I have included it in both the ways. Second point. Second is economic growth projection. The way I have said, that is GDP growth estimates. That is GDP growth estimates. This is the other factor. These two factors we have already discussed. Let's move ahead. The next point is, sir, currency demand analysis. Currency demand analysis means, sir, the currency which you are going to print is actually what? It is actually the cash. But in today's digital world, demand on cash is decreasing. So currency need to be printed should be taken into consideration twice, because these days, I'm not saying demand on money is decreasing, but demand on cash is decreasing. So RBI also take into consideration currency demand analysis, which evaluate the public demand for cash, including the seasonal trends as well as change in customer behavior, help set appropriate currency limit. The next point is banking system liquidity. If your banking system is strong and banking system is capable to generate adequate liquidity in the market, you must have heard about a term that is, I'm not sure that whether you have heard about this term or not, but in case of commercial banks, they are responsible to provide loan. And there is a term which is known as credit creation. I'm just giving you a glimpse of it. Let's say 100% of your economy is cashless economy. There is no cash. Entire transaction is done through bank. In that case, if 100 rupees is deposit, just 100 rupees is deposit, please pay attention, out of which liquidity reserve ratio, that means CRR and SLR collectively is 20%. You know, this 100 rupees is capable to create how much credit? This 100 rupees is capable to create how much credit? It's not 80 rupees. You must be wondering that 100 में से 20 गए, बाकी बचे 80 को लोन पे दे दो, 80 रुपए क्रेडिट क्रिएट होगा. नहीं. The formula, if I say, the formula is 1 by reserve, which means 1 by 20%, which means 5 times. Which means 5 times. It means, what does it mean? It means that 100 rupees has a capacity. 100 rupees has a capacity to create a credit 5 times, which means this 100 rupees is in a position that 400 can be given on loan out of this 100 and rest 100 rupees can be reserved. How this is possible? So this is possible because of the credit creation. मतलब क्या हुआ? जो पैसा आपने डिपॉजिट किया, उसी पैसे को मैंने किसी और को लोन दिया एज अ बैंक, लेकिन मैंने लोन कैश में तो दिया नहीं, मैंने वो लोन उनके बैंक अकाउंट में ही दिया. तो वो बैंक अकाउंट में जो मैंने उन्हें 80 रुपीज का लोन दिया, वो 80 रुपीज बैक मेरे बैंक में डिपॉजिट की फॉर्म में तो आ गए. तो वो 100 का 80 हुआ, फिर वो 80 में 60 और ऐड हुए, फिर 60 से 40, ऐसे करते द टोटल deposit is not 100. This 100 will turn into 500, out of which 400 can be given on loan and rest 100 is reserved. So this is a very important term which you need to remember. That is what? That is what? Banking system liquidity. Obviously, in India, or practically, cashless economy is a myth. No economy can be termed as cashless economy today. So we have cash, we have deposits. So now we have two terms. One, we have cash deposit ratio. One, we have reserve deposit ratio, and on the basis of these ratios, we calculate the liquidity, or we calculate the actual multiplier, we calculate the actual credit creation, which won't be 1 by r, it will be less than 1 by r. Obviously it will be less than 1 by r, but still there will be a factor कि जो 100 रुपए आपने print किए हैं, that is not valuing 100 रुपए in the market, because they will be created as a loan by bank multiple times. Second point in this discussion is financial stability consideration. So RBI also take into the consideration the financial stability of the economy, so that we should take adequate decisions what to print or how much to print. Otherwise it may result in monetary instability. Then we have very important forecasting models. Forecasting models means econometric models. They help us to predict future economic conditions as well as the future currency needs. So we will keep in mind the forecasting models as well before deciding how much currencies need to be printed. Next one, we have collaboration with financial authorities. Financial authority collaboration means coordinating with government fiscal policies. It can impact the currency needs. So if the government is increasing its spending, then central bank has to increase its currency printing, then only the targets or the government requirements can be fulfilled. Is it clear? Next, we have public confidence and sentiments, because we are giving you a fiat money, which is basically a promissory note. So we must keep in mind the public confidence and sentiment. That means you must print according to your capacity or according to the confidence you have that public will trust you. That public will trust you. आपने 100 रुपए 500 रुपए छाप तो दिए, नीचे लिख तो दिया, हम धारक को 100 रुपए 500 रुपए देने का वादा करते हैं, लेकिन धारक आपके वादे पर विश्वास तो करे. अगर वो ट्रस्ट नहीं होगा तो करेंसी प्रिंट करने का मतलब नहीं है, और जैसे ही वो ट्रस्ट टूटा तो वैल्यू ऑफ करेंसी क्या हो जाएगी? कम हो जाएगी. लास्टली, we have to keep in mind the international conditions, because we have a term that is forex, foreign exchange. If you are increasing money supply, that means if you are increasing Indian rupees in comparison to US dollar. Now consider Indian rupees as commodity 1, consider US dollar as commodity 2. What do the economy rules say? So the general law of economy says that the moment supply increases, its value decreases. So if you are increasing the supply of Indian rupees, its value will decrease with respect to the other currencies, and your currency or your Indian rupees will depreciate. So you need to think wisely before taking a decision. Is it clear, everyone? Is it clear, everyone? So next time, if someone asks you, RBI is the central bank of the country, your answer is yes. So RBI is responsible to print the currency? Yes. But the question is, can RBI print unlimited currency? No, sir. Sorry, RBI, yes, sir. RBI can print. RBI has the power to print unlimited currency. But do you think RBI will print unlimited currency? No, sir. RBI will print limited currency only, because unlimited currency will result in unlimited inflation rates, uncontrolled inflation rate, which results in crash of the economy, which results in crash of the entire economy. Now, the question is how this limit is decided. So this limit is decided basically on 9-10 factors, but out of those 9 or 10 factors, 2 factors are really very important. First one, GDP growth estimates, that what are the GDP growth projection for the country, and secondly, what is the capacity of the country to handle the inflation rate. So on the basis of these 2 factors majorly, keeping in account the rest other 10 factors, the decision is taken, and the factors include inflation rates, GDP growth estimates, currency demand in the country, banking system liquidity, financial stability considerations, forecasting model, then we have collaboration with fiscal authorities, then we have public sentiments, confidence, and international consideration. So these are in total, if I say, 9 factors or 7 factors except GDP and inflation, which are taken into consideration before currency is printed or before the limit is decided that what value of currency is going to be printed for the current financial year. Got it? Is it clear? Got it? Is it clear? So I've answered my first question as well as second question, which is mentioned on the thumbnail. First question was, can RBI print unlimited currency? Yes. Would RBI print unlimited currency? No. RBI print limited currency? Yes, sir. Limit is decided only on the basis of GDP or inflation? No. What are the other factors? We have discussed. Now, the third question which I have raised in my thumbnail itself, that was department. That is the department of RBI involved in this entire process. So let's talk about the RBI department. But before I move ahead, Suraj Parmeshwar, is it clear? Whatever we have discussed till now, is it clear? Just give me yes, sir, so that I can move ahead. Guys, give me yes, sir, so that I can move ahead. Guys, give me a thumbs up, give me yes, sir, so that I can move ahead without any further delay. Okay, now the next point is, whenever we talk about the printing of currency, before I move on to the departments, I would like to discuss the methods which are used by RBI. See, we have discussed that how the limit is decided. That is fine. But RBI is promising authority, and if I am promising something, I should have the assets in backup to service my promise in the near future. So that is known as the methods used by central banks to print currency. When RBI was introduced and RBI started printing the currency, at that particular moment, RBI was printing currency on the basis of gold reserves. That means the value of gold reserves RBI possessed, equivalent amount of currency was printed. But over the period of time, as gold is, we all know that it is it is not something, or it is not a resource which is available in abundant, so it's a scarce resource, and RBI witnessed that the demand on currency was increasing, but gold reserves were not enough to print the actual, or not enough to meet the actual demand. Then RBI moved on to the proportional reserve system, which says that RBI will maintain 40% of the total currency targets in the form of gold, but at least 40 crores, and rest 60% will be maintained in the form of currency. Then finally in 1956, RBI shifted to a new method which is known as minimum reserve system, where RBI came up with the statement that I will be maintaining bare minimum 200 crores, 115 crore in the form of gold, rest 85 crore in the form of foreign currency, and I will be printing the currency. This is the minimum reserve. Over the period of time, if RBI is increasing these reserves, it's good. That means it is increasing the credibility of RBI in front of the public, in front of the one who is using the Indian rupees. Now, out of the box, but it clicked me. We all know that BRICS summit is going on in Russia. In the BRICS summit, there is a decision taken, and the decision is BRICS nation as well as the newly added members, they will be trading with each other, or they will be settling down the foreign trade in local currency itself in order to decrease their dependency on dollars. So if we are settling down in in local currencies, that means not only India but the other nations which are settling down with India in the local currency, they will also be using the Indian currency. So that confidence or that trust is not only looked from the individuals, or not only from the residents of the country, but also from the foreign residents as well, and therefore RBI will try to increase, RBI will undoubtedly try to increase its reserves. So let's read it out. In order to issue the currency notes of different denomination, RBI followed a system, as we call it as backing of values of note issued, which was known as proportional reserve system. The proportional reserve system of note issue was followed in India until 1956, and after 1956 minimum reserve system was introduced. Please pay attention. RBI maintains certain reserve. This is to provide support to the total volume of currency issued by Reserve Bank of India. So it is very clearly mentioned certain reserves. It doesn't mean that if RBI has printed 30 lakh crore rupees, which means RBI is having reserves of 30 lakh crore. That is not a case. Certain reserves. अगर कुछ कल को ऊपर नीचे हुआ, reserves हैं, बचा लेंगे country को. That is the point. Moving ahead. According to the proportional reserve system, out of the reserves, certain percentage or proportion is need to be held in the form of gold, and rest can be held in the form of government securities or anything like that. So proportional reserve system was adopted in India on the recommendation of Hilton Young in 1927. And if I say Germany, so Germany was the first one to adopt proportional reserve system. In the year 1875, a number of precious metals to be maintained usually varies from 25%, like in Canada and Argentina, and to 40% in countries like India, US, and Germany. Remaining proportion is going to be maintained in the standard security that could be from 75 to 60%, obviously on the same. As per the RBI Act, the entire issue of currency note is subjected to be done by RBI only. As per the section 33, the amount of reserves to be maintained should be minimum of 40% in gold and rest in sterling security. Sterling security means sterling bonds. I'm talking about UK. Then over the period of time after independence, this sterling security was removed and the amendment was done. I have that point also. So the act was amended in 1948 by replacing foreign securities in place of sterling security. Now we have a term that is foreign security. As a result, as per the proportional reserve system, RBI had to maintain reserve of 40% in gold and foreign currencies. The remaining 60% can be maintained by 1 rupee notes or by rupee coins and government security, whatever you can. So proportional reserve system proved to be much inelastic and inflexible, and due to which in 1956 it was replaced by minimum reserve system. It was replaced by minimum reserve system. I have added the merits and demerits of this proportional reserve system, which you can go for it. Strength INR currency appreciation. That is true, Parmeshwar. If you are saying this in context to BRICS wala part, that if India is making settlement or foreign transaction settlement in local currency, obviously it will decrease our dependency on dollar, which will undoubtedly appreciate Indian currency with respect to. It will undoubtedly appreciate Indian currency with respect to the foreign currencies. So this I have taken, guys, a screenshot from a very important book. There's no need to mention the name of the book, because the moment I'll mention the name of the book, you all will be thinking that this is the book we require for RBI. That is not the case, but I've taken a screenshot which will help you to understand 40% wala part, or I said 40 crore in value, that is minimum. Then it was replaced in 1956, and when it was replaced in 1956, it was replaced by minimum reserve system. And minimum reserve system, the minimum reserves which were prescribed, that was 200 crores. In foreign securities, minimum reserves. Okay, I'll just give you the answer. This is 200 crores. This is 200 crores, out of which 115 crore is in the form of gold and 85 crore rupees is in the form of foreign currency. So, foreign exchange reserve was fixed 200 crores. So, what is the foreign exchange reserve? That is 200 crores, of which minimum value of gold will be 115 crore rupees, and rest will be maintained in the form of foreign currency. But overall, if I say they have prescribed the minimum reserves, they have prescribed a minimum reserves that was 400 crores. But if I talk about the foreign reserves only, which is more important, in 1957, the provision governing the minimum amount. So this is the point which you need to remember. That is it. Now, I come to my third question. My third question was Department of RBI. So please pay attention. In terms of Reserve Bank of India Act, RBI conducts note issue through two separate departments. First department is issue department. Second department is banking department. So the issue department is basically liable for all currency note put into circulation from time to time. Remember that. So the issue department is liable for all currency notes to be put into circulation. The issue department is required to maintain eligible assets for equivalent value in terms of reserves or in terms of RBI Act, the asset of issue department against which currency notes can be issued consist of gold, foreign securities, rupee coins, government of India rupee securities, bill of exchange, promissory notes payable in India whatsoever. In practice, the distinction between the issue department and banking department does not have much economic significance because the asset of two departments keep on shifting frequently. Now let's talk on the next department, that is the banking department. If I talk about the banking department, so banking department is basically responsible. Banking department is basically responsible to circulate the currency to the banks. So issue department in the market and to the bank is done by the banking department, but the assets, they keep on shifting frequently, which you need to remember. So this is the timeline for RBI. In 1935, RBI was inaugurated. 1938, first 5 rupee note was issued by RBI, then 10, 100, 1000 and even 10,000. So RBI can print what value or what denomination, maximum denomination. So RBI has a power to print maximum denomination of 10,000 rupees. 1940, 1 rupee note was reintroduced. Then 1946, 1000 and 1000 notes were taken out of circulation. So first demonetization was done in 1946, that is before independence. Second demonetization was done in 1978, 1000, 5000, 10,000 notes deemed illegal for second time. So this is again demonetization. And third demonetization, we all know that was done in 2016. So I will be discussing about demonetization in my next session, but this is the timeline which you need to remember, and even I have given this entire timeline in the form of well-weighed discussion as well. So out of my all questions which have been mentioned on the thumbnail, I have answered 4 questions out of 5. One question is still left, that is demonetization. I believe we need a separate session on demonetization, so I will be taking up a separate session maybe next week, where I will be separately, individually and independently discussing only one term, that is demonetization. So how was it, guys? How was it? For the very first time, if you have learned the circulation of currency, remember that all the metal coins are minted by Government of India, as well as 1 rupee note is also printed by Government of India, and it is not a promissory note, it's an asset. It is an asset. And along with that, if I talk about 1 rupee note is an asset, which basically means in order to print 1 rupee note, government makes an expenditure or investment of 1 rupee only. Rest all 2 rupees to 500 rupees note which are in circulation, they all are, we say, promissory notes, where the actual value is less than the face value, where the promise is done by RBI. Secondly, we have 4 printing press in the country. One is in Salboni, then we have in Mysore. These both are under Bharatiya Reserve Bank Note Mudran Private Limited. Then one we have in Salboni and the other one we have in Dewas, which is under Security Printing and Minting Corporation of India Limited. If I talk about the minting press, where coins are minted, they are in Kolkata, Hyderabad, Noida and Mumbai. So these are the 4 cities in which these minting press are present. Is it clear, everyone? So this will be all from my side for the today's session. In next session, I'll discuss demonetization for sure, but I'm pretty sure all the 4 questions which are mentioned on the thumbnail, which I answered today, is crystal clear to you. If you want to understand all the topics related to RBI or finance in much detail, then do join Testbook Supercoaching application. Download the app, search RBI and do join a batch which is Lakshya batch for next 12 months. And I can assure you, the moment you join this batch, you will be in a position to secure your selection for RBI Grade B 2025 examination. So that will be all, guys. We'll catch you in the next session. Good luck. God bless you all. Take care. Bye-bye.